Hey, welcome back. Having a large bag of exit strategies in real estate is the key to success. In this video, I'm going to talk about what is an exit strategy in real estate. All right, so first I'm going to explain what the heck is an exit strategy. Then I'm going to give you multiple different examples of an exit strategy in real estate. And by the end of this video, you're going to be super confident of all the exit strategies in real estate and which one will fit for your particular situation. All right, so exit strategy number one is selling. Actually selling the property. This is considered an exit strategy. We don't have to make this anything complicated here. So let me give you an example of selling a property. So for example, I'm going to find a fixer-upper. I'm going to drive by it and I'm going to make an offer and I'm going to buy this property and I'm going to rip out all the dirty old stinky cat pee carpet. I'm going to paint it. I'm going to put new carpet in. I'm going to fix up the kitchen. I'm going to fix up the bathroom, because what do women buyers love? And by the way, men out there, listen, your women, your wives make the decision. They're the ones that buy the house. So the kitchen and the bathrooms have to attract these women to make the decision to buy this house. So guys, the ones that are fixing up these houses and flipping these houses, only things that matter are kitchens and bathrooms, and yes, the master bedroom too, but first is the kitchen, then the bathrooms. So focus on those things. And if you're going to spend, if you only have a short budget, a tight budget, put most of it in the kitchen and then the bathroom and then the master bedroom. So if you can do all three, that's perfect, but focus on the kitchens first. All right, so back to the exit strategy. And that is selling the property. You're going to put it on the MLS with a realtor, or you're going to list it for sale by owner, FSBO, or hey, where are all the buyers going right now? Zillow.com. All right, next exit strategy is the B.R.R.R method. You know, that is buy, renovate, rent it out, and then refinance it. B.R.R.R. So buy, renovate, rent it out, and then refinance it. Why do you wait to refinance it last? Because the bank wants to see that you've stabilized this property, you fix it up, and now they're going to give you some of your money that you put back into it. Hopefully you've accelerated, increased the value of the property so you can pull out, you know, all your funds that you put into this property. This is an exit strategy. So let me give you an example. You're driving down the road, you see a great rental property, maybe it's a duplex or a triplex or a fourplex, and this thing is run down. It's like C condition. The tenants aren't paying rent. The building's falling into itself. The roof needs repaired. So you buy this property, you buy this duplex or whatever, you pay everyone, give them cash for keys. That is you giving them cash. They give you the keys, they move out. You go in and gut the entire place, make it a beautiful, affordable rental for someone. You rent it out and then refinance this thing to get your money back out of the property. All right, next, let's talk about lease option. This could be an exit strategy, but it also could be an entrance strategy, but you could do a sandwich lease option. It could be your entrance and your exit strategy. So let's talk about lease option. That is two separate agreements. One is the lease and the other is the option. The lease is basically just a general rental agreement. I'm going to pay $1,000 a month for a 12-month lease. And if I'm late, it's going to be a $75 late charge. And I'm not allowed to have pets. I'm not allowed to smoke in the building. That is a lease. And then usually I put a security deposit if I break anything. And then the option to buy is like an add-on to the lease. The option to buy locks your price to purchase the house for at least 1 year, sometimes 24 months, with the right to extend for a fee. But that lease option allows many people to get into a property that couldn't have been able to. Not all people have W-2 consistent paying jobs. There's business owners that have like sporadic incomes, or commission salespeople, 100% commission people that get paid random times, like maybe every 60 days or every 75 days. So their pay is up and down. Their pay is up and down and not completely consistent. So banks and loan officers and mortgage companies want to see consistent, steady income every 2 weeks or bi-weekly or weekly. And a lot of times we don't have as good of credit scores either when we're business owners or professionals that are 100% commission, because we might have missed a payment somewhere, or someone didn't pay, one of our customers didn't pay, and maybe a tenant didn't pay and we got behind on the mortgage. So lease options work great for professionals and business owners and 100% commission people that have sporadic income and not so great credit. That allows them to get into a property, and it allows me as a real estate investor to buy houses and properties and buildings on a lease option and then turn around and sandwich lease option that to my buyer. So how does that work for me? It gives me 3 paydays. The first payday is the option funds that my buyer pays me. The second payday is, for instance, if I'm paying $1,000 a month to that owner, seller, or landlord, and my lease option buyer tenant, lease option tenant, is paying me $1,200 a month. That's a $200 a month difference. So I'm getting paid $200 a month times 10 months. That's $2,000. That's $2,400 a year that I'm making in income. And then the third and final payment is when my tenant buyer exercises their option. Let's just say that I got the option for $100,000 from the person selling me the real estate, the seller, and I'm selling it to my lease option buyer for $20,000. Well, that's the third and final payday. So for instance, let's just say that they put a $10,000 option payment and they're paying an extra $200 a month, and then they're going to purchase it ultimately for $120,000. So you got the $10,000 up front, you get the $2,400 over that 12-month period, the $200 extra a month, and then you get that final $10,000 option payment at the end when they exercise that option. So that's 3 paydays. So that's really neat, right? So go ahead and smash that subscribe button and also hit that like button. It's like an extra tip for me, and it lets me know that I'm on the right track, sharing the information that you're looking for. I come out with these videos 5 days a week. So keep me on the right track by hitting that subscribe button as well as the like button if this is speaking to you. All right, let's get back to it. And then I want to talk about wholesaling or assignment of contract. Let's just say that I got that property under contract, the lease option that property from a seller. I could potentially assign that contract. Or let's just say I got a great cash price from that seller for $90,000 and the house and the land are worth $120,000. Well, I've got it under contract at a discount. I could sell that contract for $95,000. So the difference of what I got it under contract, the price I sell it for, $95,000. So I got it under contract for $90,000. I'm selling it for $95,000. I keep the $5,000 difference. That is an exit strategy, another exit strategy in real estate. All right, and finally, I want to talk about the holy grail of the exit strategies of all exit strategy, and that is seller financing land. That is the ultimate passive income business. That gives me so much passive income, which it gives me financial freedom and time freedom and geography freedom. When I purchase land at crazy massive discounts, I'm talking about 30, 40 cents on the dollar, and I will turn around and sell it to someone at premium and retail value. This gives me the ultimate exit strategy. How am I doing this? I'm sending out letters to landowners. I'm buying the land at crazy massive discounts, and then I'm turning around and selling it to a multitude of buyers that are looking for monthly financing. How do I do this? I do this by finding someone that's willing to sell the land at a discount, and then I turn around and sell it to my buyer that's willing to give a down payment large enough to get my purchase price out of that land for where ultimately I have no risk in the deal. And then I've created these over 115 times. I've done this 115 times. That allows me to get paid 115 times a month. Sometimes multiple times in a day. We've done over 390 land transactions. We might think, well, you've done 390. Why do you only have 115 notes coming in? Well, the rest of those deals is what pays for me to be able to buy that land at a crazy massive discount, 30 or 40 cents on the dollar, and then turn around and sell it to someone at a down payment of $2,000, $3,000, or even $500 down, and then build that ultimate passive income business. If you're interested in building something like that, or you're looking to create financial freedom for yourself with massive passive income coming in, go ahead to thelandsharks.com, schedule a call, and we'll see what your real estate investing goals are. And if we feel like we're a great fit, I'd be honored to coach you.